Okay, let's take some of the concepts and tools that we've learned and see what we can do with them. We've learned opportunity cost, comparative advantage, specialization based on comparative advantage, trade based on specialization, and production possibilities curves. So let's take all those ingredients, mix them together, and see what we can come up with. I also want to add two other things. First, I want to add bananas, and secondly, crude oil. I know that bananas and crude oil might not be very palatable, but they're going to be useful. First of all, let's consider Honduras. Honduras happens to be a wonderful place for growing bananas. The climate is just right. They have the right rainfall, the right nutrients in the soil. So, a certain number of workers using a certain amount of resources in Honduras can produce a large amount of bananas. On the other hand, unfortunately, there's not very much crude oil underneath Honduras. So if you take the same number of workers, the same amount of resources, and they try to find crude oil, they might be able to find some, but not very much. So let's take those two ideas and put them into a production possibilities curve. So here we have the blank frame for the graph, crude oil on the vertical axis, bananas on the horizontal axis. If we, as we said, the workers spend all their time producing bananas and none looking for crude oil, then maybe they could produce 24 units of bananas and 0 units of crude oil. If, on the other hand, the same number of workers and the same amount of resources were used to look for crude oil, they could find a small amount, maybe 4 units of crude oil. Now we can take those two quantities, connect them together with a line, and now we have the production possibilities curve for Honduras. I've drawn a straight line here because I'm being a little bit lazy. So Honduras, if they want to, can not only produce either 4 units of oil and no bananas, 24 units of bananas and no oil, but they could also pick some point in between. They could divide their resources up. So perhaps they might pick this point on the graph and produce 2 units of oil and 6 units of bananas. However, they could not produce anything outside or above the production possibilities curve. It certainly is not even close to being possible that they could provide 12 units of oil and 12 units of bananas. In a sense, we can look at the size of this triangle and say that this is a measure of the possible wealth for Honduras given their current resources and technology in terms of crude oil and banana production. We can consider their opportunity cost also. For the Honduran workers to produce 1 unit of bananas, they only have to give up 1/6 of a unit of oil. On the other hand, if they want to produce 1 unit of oil, they have to give up 6 units of bananas. We'll come back to opportunity cost in a few minutes. Now let's look at Texas. As we all know, there's lots of oil underneath Texas. So if a certain number of workers in Texas and a certain amount of resources were used to find oil, but no bananas, perhaps they could find 24 units of oil, but no bananas. On the other hand, if that same number of workers and resources were used to try to produce bananas, but no crude oil, then they could produce bananas, but because the climate and the soil isn't right and the minerals, then probably the only way that commercial bananas could be produced in Texas is if the workers first built huge hydroponic greenhouses, spent a lot of money on computer control systems to get just the right amount of nutrients and moisture to them, heating them up to make sure that they stayed at the right temperature, etc. If they did that, because they'd have to spend so much time building the greenhouses and the hydroponic system, then on the average, that same number of workers and resources might only be able to produce 4 units of bananas and none of crude oil. So, of course, if we connect those 2 points together, then this would be the size of the production possibilities for Texas in terms of crude oil and bananas. Texas could also choose any point between those two extremes, but once again, there's no way that Texas could even come close to producing 12 units of crude oil and 12 units of bananas both. That's just far outside of their attainable levels of production. We can consider the opportunity cost for Texas. If they want to produce 1 unit of bananas, they have to give up 6 units of oil. On the other hand, if they want to produce 1 unit of oil, they only have to give up 1/6 of a unit of bananas. If we compare the opportunity cost for Honduras and Texas, we see that for Honduras to produce 1 unit of bananas, they have to give up 1/6 of a unit of oil. For Texas to produce 1 unit of bananas, they have to give up 6 units of oil. Since the opportunity cost for Honduras is much lower, then we say that they have the lowest opportunity cost for producing bananas, and needless to say, Texas will have the lowest opportunity cost for producing oil. Because of that, then, Honduras also has the comparative advantage at banana production. Texas has the comparative advantage at oil production. I might point out at this point that if one trading partner has the comparative advantage at producing one good, the other one will automatically have the comparative advantage at producing the other good, except in the case where each of them both have exactly the same opportunity cost for both different goods. In that kind of a case, it doesn't really make any sense for them to trade. But if there are any differences, then one has the comparative advantage in one thing, the other has comparative advantage in the other thing. So, Honduras then should specialize in producing bananas. Texas should specialize in producing oil. If they specialize in trade, then we can start off by putting both of these production possibilities curves on the same graph and see the relative size of wealth for each of these 2 different countries. I'll just loosely call Texas a country. But now look what happens if they specialize in trade. What happens here is that Honduras will specialize in producing bananas and no oil. They will produce 24 units of bananas a day. Texas workers will specialize in producing oil but no bananas. They will produce 24 units of oil per day. And now what happens is that the 2 countries can trade with each other, and they can choose any point along that trade power production possibilities curve. So what happens is, let's say that Honduras trades half of their banana production to Texas for half of its oil production. In that case, what happens is that Honduras now has 12 units of bananas and 12 units of oil, and Texas also has 12 units of oil and 12 units of bananas. What we see here is that now both countries are almost miraculously richer than they were before. Without trading, it was not going to be possible for either country to come anywhere near having 12 units of oil and 12 units of bananas. But now, without having to work any harder, it's actually possible for them to do that. The trade production possibilities for these two countries then is much, much larger, hundreds of percent higher than it was before. This kind of a situation is actually common in the real world because countries are going to look for trading partners that will give them the biggest opportunity for gains, and therefore we see very large gains as being common in the real world. Trade based on specialization, based on comparative advantage, makes both countries much richer. It's a win-win exchange. Part of the reason it's win-win is because if either country would lose by trading, they just wouldn't trade. The gains from trade based on specialization, based on comparative advantage, are the number one reason why the world has gotten so much richer over the past 2 centuries, especially since World War II. After all, the example we saw was just for 2 countries, for 2 different products, oil and bananas. Imagine this multiplied by hundreds of different countries, millions of different companies or products, and billions of different people. And you can see that the gains worldwide would be incredible. And the truth is that the gains in standard of living, in wealth of humanity that we've seen over the last 2 centuries, especially since World War II, have been incredible. As I said in a previous video, taking someone from 200 years ago or even 100 years ago, bringing them to the world of today would be a total shock because things have changed so much they would hardly be able to even recognize it. Well, now, for some strange reason, I'm feeling hungry for a smoothie, so I think I'm going to take a break and have one, but not with any oil in it.